Today I'm going to be sharing with you my 3 biggest investing mistakes. When I found my system, it was working for me, and then I started deviating. And the more I deviated, the more I experienced what didn't work. And today I'm going to share with you the top 3 mistakes that I learned from that I will never deviate away from again. I've paid over $1 million to one of my mentors, and I'll never forget when we were having this moment with each other, and I think I was being probably obnoxious, and he gave me this look, almost like he was my dad looking down at me, and he just didn't say a thing. And I kind of felt like I was in trouble, and when I finally shut up, I'll never forget this moment. He turned to me and he said, "Chris, the most dangerous information to you is what you don't know." And that's all he had to say for me to realize that I had become married to my opinion, and he was trying to get me to challenge my opinion. So in this game of real estate, I actually had discovered like the perfect strategy, but I didn't know what I didn't know. I didn't know it was the perfect strategy, so I decided that I would try some different things. And through sorry experience, I learned that some of these things ended up spanking me pretty hard. After I had done about 10 properties, I decided that I wanted to try my hand at these ritzy upper end condos that were next to the university. And I had some buddies that lived there, and I was always kind of jealous, like, man, you guys get to live at the Belmont apartments. Those are so nice. And so I thought to myself, well, shoot, I'm an investor now. I never got to stay there as a college kid, but you know what? I'm going to own those. And so one of the first things that I actually tried my hand at was, number 1, college condos. And not just kind of average condos. I was trying to do the higher end condos because the parents of those kids would actually pay more. But the reality is that there were some vacancies that I didn't expect. There were definitely expenses that I didn't expect. And by the time I got out of those, I'm just going to tell you, I didn't make money. I lost money. I bought 4 of them. And so I had something that was working incredibly well, and I made this assumption. If this worked well, this will work well. And it's as if I actually thought I must have the Midas touch. If I touch it, it's going to turn to gold. And the reality is those condos did not turn to gold. And when I sold them, I was really happy. Before I move on to number 2, I just want to share with you actually a big mistake that I made with these condos, which is I put some of them on a 15-year mortgage. Now, do you know what a 15-year mortgage is? Most people will run their real estate on a 30-year mortgage. Now, even though I'm not going to pay off my house in 30 years, I'm going to hold it, I'm going to control it, I'm going to sell it. The reason why I got into these condos was I thought, hey, you know what? Let's get these things paid off. We'll do one of them on a 30-year. We'll do 2 of them on a 15-year. I can't remember what we did with the 4th one. But I'll tell you that when you put something on a 15-year payment, it's like, hey, I can pay it off in 15 years instead of 30 years. But you know what? It also drives up that payment high enough that I was losing money on it. And so sure, I could have had it paid off in 15 years, but frankly, it was draining the bank account left and right. And so one of the things that I learned was I'm not trying to actually pay off real estate. I'm controlling real estate. And so I'm going to only hold it for 3, 5, 7 years. I'm going to make the lion's share of returns, and then I'm going to sell it and trade 2 for 4 and 4 for 8. And I'm actually going to let this portfolio grow. So part of the mistake was actually coming outside of my system and doing these condos, but part of it was changing my thinking or experimenting with the idea of in 15 years, these things will be paid off. And that was burying me alive. The second mistake that I made was I've got a rule, you've heard me say it in probably what feels like every video, especially if you're a subscriber and you watch the videos I come out with every day. I always talk about how important it is to never go above the median. Well, I want to share with you what that means. The median is like the average home price that people in an area will pay for real estate. Like in America, nationwide, our median is just under $250,000, and it fluctuates. And it's something that will go up with time, and after 2008, it dropped, and then now it's kind of up there again, it'll drop again, and it's a number that'll keep on moving. But the reason why I want to be under the median is because that's where the most home buyers are. Go to the opposite, $1 million house. How many people can afford a $1 million house compared to a $200,000 house? Not very many people. Well, how I learned this was I found a house, I went over the median, I broke a rule, I was still fresh and new, I didn't know what I didn't know, right? So I found this house and it had a value of like $400,000 and I could purchase it for $300,000. And here was my rationale. Do the math. Worth 400, you can buy it for 300. Worth 400, valued at 300. You know what that looks like to me? It looks like $100,000 of juicy equity. When I bought that property, I'm like, dude, my net worth just went up $100,000. Look at me. The reality is that $100,000 of equity that never materialized. When the market downturned, guess what happened to all the equity? Poof. The reason why I don't typically buy homes over $250,000 and often under $200,000 is because I need to be where the people are. Real estate is actually a business of people, not property. And some people don't understand that. Real estate in and of itself is worthless unless someone is there to occupy it, someone is there to live in it, someone is there to transact it. So if you can learn from one of my big mistakes, don't buy things over the median unless you know exactly what you're doing and you are experienced and you've got mentors backing up what you're talking about. So the third big mistake that I made was that I flipped this property and I made $15,000. And I know what you're thinking, Chris, you flipped the property, you made $15,000. What do you mean that was a mistake? Well, let me help you understand this. When I got this property, I had gotten it at such a discount. I'm like, dude, I'm going to turn this puppy and my partner's going to make 15 grand and I'll make 15 grand. We're going to clear 30,000. It'll be awesome. And you know, we did all this work on this deal, and in the end, I got my $15,000 check, and I felt like I had just made such a dumb mistake. And here's why. In my strategy that I often talk about, at least for beginners, if you're new to the game of real estate, I got advanced strategies, nationwide strategies, multifamily strategies, but that's for people with money. When you're brand new and you're just starting the game, I'm always talking about doing my lease option system. This house would have made a sweetheart deal, and when I flipped it, this is so typical. Between me and my partner, we made $30,000, but I am positive if we had just waited 2 to 3 years on my lease option model, that we would have cleared $90,000. Why? Because when you flip a property, you're gonna dump way more money in to bring it up to market to sell it now. You usually gotta offer some kind of discount on it if you want it to move now. You've got to pay all the realtor fees, 6% plus a percentage of closing costs on both sides. And so there was $50,000 I just ate up like that because I was interested in having my money today. But the reality is if I had held it for 3 years, it would have been a sick cash flow. And this 90 is conservative, probably would have pulled in over $100,000, which is one of the core reasons why I don't flip properties. It's because, yeah, I get it. If you need money, sure, flip a property. But you know what? When I do a lease option, I collect on average $5,000 up front, $500 a month of cash flow. And on top of that, when I sell it, I'm making tens of thousands of dollars. So I really regret that flip and a couple others that I did, because when you get to the point where you don't need the money or you're tired of resetting and doing all the work again, you want to have a property work for you. This property could have paid out more than triple the money and been working for me day and night for 3 years before I retired it. And I never got there because I got caught up in wanting to have that flipping experience when I really didn't need the money. And guess what I did with the 15 grand? I just put it right back into real estate. So it felt like a total opportunity cost waste for me. So I will tell you this, learning what I've learned about college condos, buying over the median, flipping properties, for me, all it did was bring me back. I now know what I know, not what I no longer didn't know. And I'm going to tell you right now, I have a system that I do not deviate from. And I basically have 3 systems, just as a little bonus to you. I got something for people that are starting with no money whatsoever. I got a system for people that have some money. And then I have a system for people that have lots of money. And if you're interested in what it would look like to avoid all the pitfalls, all the trial and error of just trying to read a book and figure it out on your own, no offense to myself, these videos are great, but if you're gonna go out there and do real estate, make sure one way or the other that you are backed by a mentor, and a mentor that has extensive research experience, extensive results, extensive amounts of money that they've made. And if you don't have one of those, I might be your guy. And all you got to do is click the link in the description below. And what I will do is I will supercharge your growth curve, and I'm just going to carry you, teleport you to the top of the mountain so you can skip all of my lessons that I've learned from my mentors, skip everything I've learned on doing now over 3,000 deals. And if you want the ultimate shortcut, no matter your age, your financial situation, remember, I've got 3 different ways of playing with people. So all you got to do is click the link in the description below and talk to my team, and let's figure out what will work best for you. Hey, thank you so much for watching today's video. If this was useful for you, if you got some golden nuggets out of this, I'm gonna invite you right now to make sure that you are a subscriber, that you ring the bell, because every single day one of these videos comes out and we wanna notify you. And also one last thing, if you know someone that would have really appreciated today's video content, then you know what? Post it to your social media or post it to that friend and invite them to come on a journey with you and I of learning how to build supreme wealth and the life of our dreams.